Recording.
Yeah, I've started.
Okay.
Somebody was asking me if I should permit them to record on their own end. Since I'm already recording, there's no point now.
It was me. Don't worry, that's fine.
Okay.
It was me before. That's fine.
So, yeah. Now looking at this guy. Looking at this guy. What I did. Let me just remove this stuff. Yeah. I've already analyzed it. Like I'm seeing a probable little sell before a move. So I am seeing that it's still going to sell. It's still going to sell down. So for next week, it's still going to sell. That's what I'm seeing. All right. So what made me to that made me want to buy this trade was an area on the daily time frame. So, but on the weekly time frame, it wasn't good for a buy. But based on the fact I've actually I've done something like this before in the past, where I used because of one of the higher time frame that wasn't in tune of my analysis to not take a trade, and then the trade eventually played out. So I was like, what? So sometimes I could actually ignore one time frame, and since other time frames are saying the same thing, and then take the trade. But in the case of USD card, it didn't work out. So yeah, looking at what I actually did was I identified this resistance zone on the daily time frame. This resistance. I also identified this trend line though. This is a trend line, so yeah, and it broke it. Okay, if you look at it, it touched it here, touched it here, touched it here, and then broke it here. So that also happened. And then ignore this trend line, okay? It's not part of it. This one is not part of the current price as at then. So what I actually saw was this area. I saw this break and then this, and I saw this as a retest. And then based on where price was on what we call a breaker. And then at 50% retracement, all right? Seeing the fact that price is at the major resistance, which I, at that moment, was seeing it as a potential support, all right? And with the confluence that I had then, there was a trend line too. Yeah, there was a trend line. On the 4-hourly, potential trend line I saw on the 4-hourly time frame. So a potential trend line, yeah. This was a trend line. And this, I drew this, and you can see it tested it, all right? This was the potential trend line. And when it came to this trend line was when I had this bounce that broke a lower time frame structure, which made me believe that, okay, this price might as well rally up. So, but I actually risked 1% of the accounts on this trade because of the weekly time frame. So I had to like risk a little and watch. But I felt bad. The only reason I felt bad was it wasn't part of my plan, my trading plan. That was why I felt bad for taking the trade. It's not like the loss was small, but being the fact that I did not include it in my plan, it wasn't a good thing to do. This is one of the things that makes traders like experience what they call moving in cycle when you do something that is out of your trading plan. And yeah, you just like you make it's more like you're not making progress. You make profits, you lost profits on some pair like that. You try to trade, you're just trading, like you're not systematic about your trading, there's no plan, something like that. So you can't even track your wins and your losses. So I saw that, okay, me doing something like this without USD card being part of my trading plan, I just exhibited a bad attitude to trading. So that was just what made me feel bad about the trade. But looking at it, if the weekly time frame wasn't the way it was at that moment, it would have been a very good trade because it's the setup is really looking nice, right? But there's something I neglected as well. Apart from neglected the weekly time frame, I'll show you guys what I neglected. I saw it, I saw everything though, but I neglected a few things. So the weekly time frame, this massive rejection, one thing I neglected, which is bad. Then another thing I neglected was this. I saw it, I was just neglecting it. On the 4 hourly time frame, this is a very confirmed valid double top. This is an M pattern, right? This is a confirmed double top. And then I saw this as, okay, the neckline has been broken. When it came down to here, if you watch, you see that this is the neckline. This could have triggered me to sell, all right? But I didn't want to sell based on, I so much believe in my strategy. That's one thing, the confidence. So I saw this M and then it broke the neckline. So this bounce on a trend line actually should have just been a retest of the neckline, all right? And then price, even if I didn't want to take this, I could have done what they call initial breakout entry. As it does this at the close of this candle, I should have taken a trade. And being a day trader, from here to here is a lot of pips. All right, so from here to here, 45 pips. 45 pips is much actually. It's okay. Yeah, 45, 50 pips. So if I had just done initial breakout entry, that would have been about 50 pips or so. I usually target 50 pips first to take out some profits though. So yeah, but I didn't want to trade against my trading style. My trading style has always been like this. So it is what it is. That's just it. So the best thing I could have done was to avoid the trade. That's the best thing I could have done. Yeah. So that's it. For those that are mentorship students, this is actually what you should do. When you lose a trade, you should actually identify the reasons why you lost it. The fact is that I already saw these things before taking the trade. It's just neglect. And that's one of the major reasons I just reached 1% for the account because I wasn't really so much, confident about the trade like that. Even though I believed in the strategy I'm using so much, that made me to be trade that way. But I felt like price action was still to an extent play out. So that was just it. So that's it for this. So what are we expecting next week? Let me show you guys what we are expecting. We are expecting price to get down to this point. I've already cited an imbalance. Now I've already cited a retest that's going to happen on the lower time frame here. This imbalance And let's look into this price action that is playing out here on the 1 hour time frame. You see, we are actually expecting this price to come down here. So that's actually what's going to happen from what I'm seeing. So if you look at this, those in my mentorship, you should identify something here. So you see that there's a break of structure here. There's a break of structure here. And then price is going up, and price has only mitigated this zone. As long as price has mitigated this zone and mitigated, does not mitigated this though, but we have an area I think is respecting, which is this POI. So looking at this POI, see that price has tapped into it. So price has tapped into that POI. Yeah. Are you guys seeing?
Yeah.
Price has tapped into this block. Can you guys hear me?
Yes, we can.
Yeah, price has tapped into this block and is rejecting it. TJ, if you remember what I told you, if you were doing risk entry, something like this.
Yeah.
So now we can't use risk entry to enter this trade anymore. We are going to use confirmation entry. How do we take this trade? Now looking at as that starts, meaning that it's respecting this. Now, the next thing you are going to do is that for us to take this trade now, we go to a lower time frame. Something like 5 minutes. You can use 15 minutes, you can use 5 minutes, but I like using 5 minutes. All right, to see it clearly, to see the price better. Depend on the strategy I want to use to make entry though. So how do I make this entry? If you look, there's a break of structure here, like I told you guys. If you have two break of structures in the higher time frame, then your break of structure that you'll be looking at to take trade in the lower time frame should just be one break of structure is enough. So you can also bring in your fib and draw it to the low. Draw it to the low. You are seeing, if you know, this is an order block, a tradable order block. So when you come here now, you can, set your order, your limit order here. Set your limit order on this block. When you set your limit order here, it depends on you. What type of a trader are you? Are you interested in risk to reward, or you're interested in pips? If you're interested in risk to reward, you can just put your stop loss above here, which I like most of the time. All right, put your stop loss above this one, and then you put your sell limits under here, which is 1.28523. Put your this in here. So your stop loss will be here. Most traders would like to put their stop loss here, but I feel like there's no point. If this price is going to respect this zone, I'll just put the stop loss just right above here. The only thing is that I want to set an alert. I want to see when the price gets triggered. Once it gets triggered, I'll be alerted, and then I'll come and watch my charts. If it takes me out, I'll find another entry around here. I prefer it that way. So I'll risk small to expect more. So that's just it. So you shouldn't be scared of losing money to the market. Actually, if you know that you're going to get it back, right? It's just the confidence. So put here, and your stop loss should be somewhere here. All right, so it's just some pips above here. Why? Because you need to give it a breathing space. Sometimes the wick may want to come out, candle may want to come out and then go back. So that's just it. So, and with this alone, you can target it as your first profit. You see that you're already making 1 to 7 risks to reward already. So if you risk 1% on this trade and eventually triggers and plays out, it means that you're making 7% on these accounts. So, and the funny thing there is that this is another POI. So for example, it takes out and you want to take the trade around here, you discover that your target has now increased, which means you even make that money back if it eventually triggers. So if it eventually triggers, If it triggers, you're going to make the money back. So you put it here. You can actually set here and set here if you know you may now have time. So that's just most of the time this one works. The last one will always work most of the time. All right. So this is it. You put it here and you put this one here. So you can see that you're having what 9.5 risk to reward. All right. Additional 2.5. So if you have lost one here, you even have an additional 1.5 after regaining back your 1%. So that's it. So that means if you had lost one here and this eventually triggers, you're going to be making 8.5% of the account. So subtracting that 1%. So you see, okay, the only way you are not profitable when you have a good strategy is when you don't plan your trading. And when you
So can I quickly ask a question?
Yeah, you can.
So if you lost the first entry, the bottom one, and
Yeah.
then it respects the top one, so when it's coming down, you can re-enter on the second one, can't you?
Yeah, you can. Look at how you enter. You use a breakout strategy. So you just, only way you enter is first scaling in, all right? But
Yeah.
most times, entering again into a trade, most times it's sweeter when it's retracing though. But on this case, there's no point, there's no room for retracement. So if price is coming from here now, coming down, so you wait for it before you take another trade. You wait for it to break through this zone
To break
and
through,
retest
okay.
it. Once it breaks and retests it, then you take it again. Because as it's breaking it, is going to flag a bit. Action and reaction equal, but opposites. Look at this is an area, so it's going to use another block to break this zone. So when you see it, you're going to take that trade with the flag as it flags up. And that's so you take it and join the trade again. So you can scale in. And once you enter this one, once it breaks, then you break even here, which means you don't have this initial risk is no longer there. If you were risking 1%, you are breaking even on the 1% here. And then it's only this 1% that is now on. And then you are even in profit around here. So even if you reverse it, you are only going to lose this 1% that you entered later. So that's how it's going. That's just how it is. But it depends on the type of trader you are. And here, if you are targeting from here to here, I really don't see any need of making the entries like that, right? So yeah, it's not good when you are starting out to be making the entries. It's actually good you make the initial entry and watch the trade to play out. Because some persons don't know how to do it. You end up risking more than you're supposed to risk if you take that as an attitude, right? Processing will see, like the way I start sometimes. I don't do that every time though, but I do it when I see the kind of opportunity and I don't want to stay in that trade for too long. I start and then it moves small. I take some profit again. I then watch out for another zone. So that's how I do it. It's not like I will stack it and then hold it there. I stack and it moves a little in profit and I take those profits. That's just how I do it. So if you don't know how to really do these things, you might end up losing a lot of money. Why? Because you can enter here and then you feel like you want to like what I'm trying to say is that if there's a reason sometimes I don't really want to share my my trade result, like as I'm trading, like share the stats, my entries, right? Because some persons may want to like copy the way I trade sometimes, and it's not, they might do it the wrong way. Like sometimes it's not really the ideal way of trading. Is when you have mastered certain things and you know when you are getting out, that's it. A newbie trader may want to stack up the way I do, and then you're waiting for trade to play out all this while. It's not fair now, because if you stack up so much, you should just be targeting shots, like the areas you are targeting should not be much. And the reason why we stack save is that we don't want to stay in that trade for too long. That's just it. So yeah. You can be very systematic with your trading. Risking 1% to make 7% or 5% is okay. Like if in a week you see that kind of trade complete 2 times, like completely 2 times, depending on how you trade and the pair that you trade. See that kind of trade completely for 2 times. You have made enough money now. Like, so it now depends on the account size. So if you have a very good account size and you can make 10% weekly on an account, that's a lot of profit. To be a profitable trader, you only need 10% monthly return. So if you can make more than 10% in a month, then you are good. So that's just okay. So this trade, this is what I'm expecting for this trade. So and the unfortunate part is that this trade is gonna get ripe on Monday, actually. So just for those that will take it, you just look at it and take it. Now this, if it doesn't play out for this, it definitely might play out for this. But I see it playing out for this though. Anyway, so or it might not even get to this point. So it might start dropping. That's another disadvantage of confirmation entries, that you miss a lot of trades. But it will also make you not to trade too much. At the same time, to avoid bad trades. Risk entry is not like that. So if you had entered this trade as a risk entry, see the pips you have gone. You have gone how many pips from here to here? 38 pips. With 38 pips, you would have, brought your stop at break even. So, but price can still go back to this place and take you out. So that's just another thing. Let's go to another chart. I've taken a lot of time to analyze one chart. GU, I'm still expecting a short sell, like a very short sell. But I'm only going to take 50 pips from GU. I'm not going to exceed 50 pips because I see that as just a retracement, because I'm feeling like it will take out this zone, but it can't just take it out. It will pull back. It will pull back a bit and then go. Even if, so that's basically what I'm seeing here on GU. And looking at this GU now. I can't even see any trend line that is going to respect, or rather a broken trend line. I see this is broken already. Okay, try to respect this one, which is the one we traded. This trade was too slow for my liking. This one we traded, and yeah. So yeah. I'm looking at price getting to probably this zone. If price gets to this zone and look like it wants to go down, I'll use confirmation entry. But for this, I'll possibly use risk entry for this because I know it's going to drop after all. So it will drop from here at least to this point. So I'm only be targeting 50 pips at maximum. Seeing the price action, the way it's coming, I know like it's going to really be slow. And if it's taking out this area, it will take some time to do it. And then if eventually gets to this point, it will drop a bit. It's more like when you throw a tennis ball or something up without much force, right? So any little resistance can actually make it to drop, right? So, but based on the fact that I'm seeing bullish momentum coming into the market, because this is, I had to adjust this thing from my monthly time frame, and I was now seeing that we have actually approached major level, because I had it here, I had it here, I had it at the bottom, I had it here also, but for some reason I brought it up because I saw this POI or something, so I had to bring it up. So I know that we have actually gotten to the major zone. So I feel like there's a bullish momentum coming in, but it might just be a retracement. But this retracement is coming from the monthly. So because it's coming from the monthly, it's really going to be a very huge retracement. It's not just going to be short retracement. It's going to like retrace even probably up to this. No, it might get to these points. It might get to these points or here before going back down. So anything that's going to happen here, any sell I'm going to do here is a retracement sell. After that, I'll be looking for a buy to buy this trade. So yeah, by Tuesday, I think, because I don't believe it will get to this point on Monday. So by Tuesday, probably, if it takes out this zone by Tuesday, probably be selling this market a little. So if you are selling this market, don't target more than 1.2. Here it should be 1.2600. All right. Although I'm putting halfway here. 1.2600. So don't target more than 1.2550. If you are taking this trade, 1.2550. All right. So it depends on how you enter. I'm still going to look for how to refine this trade to increase the risk to reward at least to 1 to 5 risk to reward. 1 to 5 risk to reward. So let's go to 1 hour. Right. On the 1 hour time frame, we have this POI. POI is here. Then go to the 5 minutes time frame. Right. Because I don't trust this zone so much to push price down, I'm only going to use confirmation entry if it actually works. If it doesn't, this one I'll be using risk entry for it. I don't use risk entry though often. I use confirmation entry more than risk entry. Risk entry is just because I know that price can't just push through this zone. So I just want to get that sniper entry. So this is, yeah. So if I'm taking this trade, I'm going to set my sell limit here at 1.26220, and then my stop loss right above here, which is some pips above the previous high, maybe like 1 to 2 pips above 1.26360. That's where my stop loss will be. Some persons will want to put their stop loss here. I don't know. Some persons are too conservative. Why? Because of 1.26500. But I believe that if price should close above here, this area is already mitigated. So it's pointless putting stop loss here. So stop loss should just be right above here. Or even if you want to be very conservative, just make sure that it's above this area. I just put it above here, which is 1.26413. Right. So that's it. But the POI that's pushing it down is this one, the other block. So closing above it is enough to know that price is not going down. So, and then your target, you should target the next psychological level, or even before the psychological level. Sometimes I like to get out before that psychological level itself. Sometimes you wouldn't even get to that psychological level. So I think everyone here knows what psychological level is. So because it can serve as where you take out your profits. Okay, it's supposed to be 1.226. 1.26. All right, so this is it. This is not up to 1:5 fixed to reward. It's like 1 to 3 or even less. But I wouldn't like to target more than that. At least to break even. Maybe I might just break even here once it gets to this point and wait for it to see if it's going to get to this zone. It's not up to 1 to 5. It's more like stop loss here. It's not up to 1 to 5. It's 1 to 2 point something. 1 point something 5. It is meaningless now. Meaningless. If I can't target up to this point, then I'm not trading it. Up to this point is even 2.94. It's a useless trade, I beg. So well, some person can still take it over. It's too listen. And it's even risk entry I want to use. Using risk entry, you should target up to 1 to 5 fixed to reward. If not, it doesn't make sense, because if you're using risk entry, you should actually target way high, because you're taking a lot of risk. And therefore means I'm not going to trade it. I'm going to look for another trade. So I'm going to wait for it to change to buyers, or if he wants to continue selling, then we can look for where to enter it and sell. Because I just feel like the sell is not going to go too much. And it's going to really struggle, even if it's selling. And you don't want to be in the trade for too long. You don't want to be in the trade for too long. Let me check another thing if I can see another reason that will make me target higher. The thing there is that this zone, if it is broken, this becomes a breaker block. And most of the time, this guy you're seeing here is a very strong order block. And being a very strong order block, if this guy eventually trades above it, it can actually become a strong breaker and can actually cause price to go back to your entry, even if you want to still go down. So it's more like this is a very strong area. So yeah, except price wants to start dropping from here, which would be nice. If price start dropping from here, I use confirmation entry. I can actually target up to this point, this previous area. which will make it better. So let's see how it goes by funny thing. If price even gets to this place, that will be on Monday, and that will be maybe during New York session Monday also. So Mondays are usually somehow. I don't know. It used to look as if Mondays they used to manipulate the market. So I don't like that Monday trading thing.
You don't trade on Mondays anyway, do you?
I don't. So I'm just seeing trades that are gonna get set on Monday. It's funny. On that Mondays, sharp price doesn't really move that well on Mondays. Price is usually sluggish on Mondays. So sometimes some pairs used to still move. Some pairs do move. Maybe when I fully start swing trading, then I won't care about what's happening again. Because when you're swing trading, all of those doesn't matter anymore. So AED/USD. AED/USD is going to do exactly the same thing GBP/USD will do, but on different levels. So AED/USD, if it breaks this zone, this is the zone, the final zone for AED/USD. All right, that's 0.72100. So, like I said earlier, AED/USD could be a better trade to take because I'm seeing that there's a lot of, move from here to here. Yeah. There's a lot of moves. So if you put your stop loss right above the mitigation order block here, this is too close. It's still the same thing. Still the same. Still the same. But this zone is still very strong. It's a very strong zone. And after all, this is a major zone on the monthly time frame, and it broke it, and it's not looking like it's a retest. But the funny thing is, if GBP/USD is going to keep going up, this guy will go up too. That's one funny thing about those two pairs. So I'm looking at this on the monthly time frame. I can see something like head and shoulder. In fact, it's not like it's a complete head and shoulder. It's in fact, wow, it just lines up. Like the only thing that is remaining is for this guy to come and break the neckline, and it's really looking it. So we might be having actually a bullish trend, a total bullish reversal, not even a retracement. GBP/USD looking like it's going to be a retracement, but this guy is looking like total bullish reversal. So yeah, if he eventually breaks this zone, which is same thing as the neckline, then he's going to rally up. So this is a potential it's not inverse head and shoulder, they call it here inverse. So yeah, seeing that this area is a major zone and tracing, tries to push up though, to push up, and might still not validate the head and shoulder. And if it doesn't validate the head and shoulder, then we're still going to start going downwards. The way it's looking, look at this area, look at this rejection, look at this rejection. Price came at exactly the same line for this guy, and then it's rejecting it too. And if you go to a daily time frame, you see a point of interest here that this guy rejected from. So there's a very high tendency that it's going to go up. I'll show you guys the point of interest. So this is a point of interest. This is a POI. I think, okay, I refined it on the 4-hour. That's why it's like this. But this is the POI I'm expecting. So, yeah. People that are doing risk entry could have traded that, could have traded this trade going up. Yeah. This is where you counter the trend. Looking at this POI. But you need some skills to counter the trend. And with such kind of trade is risk entry. So once it taps into the POI, it goes in the opposite direction. Yeah. Well, we are recording the testing this trend line for the third time. So, but I'm seeing a continuous move to the upside. Anyways, anything that price like let it do, we'll follow it wherever it goes. If it's moving, we are following it. We will not tell price what to do. It's price that will tell us what it wants to do. This guy is looking like a break and retest. But I don't know. This is funny. Come to the monthly time frame. We are seeing price currently as the major zone. And this major zone is also looking like double top. And more like we have kind of a successful break of a neckline. And then GBP USD and Euro USD looking like we are about experiencing major retracement and not actually overall change of trend. Why AUD USD is looking like it's going to be overall change of trend. Well, anything that they want to do. So this guy is actually going to retrace. Looking at it, probably get to this point because yeah, this is a major area. I don't think he wants to, he can break it just like that. I'm saying that this is a double top. And this guy has actually broken the neckline. If you put your line here, let's see. We have successfully broken the neckline, and this is a monthly candle, so you can't joke with monthly candle. It's successfully broken the neckline. So what we want to see is a retest, and after the retest, we can find POIs to start to continue selling. So that's just it. From the 8-hourly time frame or 4-hourly time frame, anyone can find POIs to start selling. So for now, Euro USD, me, I don't have business with Euro USD because I don't really see need to touch it. I don't see need. You can retrace up to these points or even these points. This is a POI, this is a POI. And retrace up to any one of them. And you see them better on the daily or 4-hour. Right. I won't go for this one. This one is too low and it's very close to the major zone. So I would watch out for this type of trade. I won't use risk entry. I will use confirmation entry. Right. And yeah, this zone is also looking good. Yeah, anywhere around here. Here is looking good. And yeah, this is a massive drop, and there's imbalance too. There's imbalance here. So here it's also looking good. Yeah. So the retracement can go as much as it wants to go. And even as it's retracing, we can also find buying opportunities, because definitely we are going to have breakout structures as it's going up. So we can be buying and be expecting price to change direction. That's just it. So if you take a very look at this, we have first breakout structure already. So if this occurs and it breaks, we have second breakout structure. So as it's going, you can always find entry to buy. So that's just it. Pound card. We have exceeded 1 hour. So pound card, I found the price has gotten to major zone. All right. Found that price has gotten to a major zone, which is here. Oh my God, look at this thing. God. Because it's wonderful consolidation, and look at what happened. This type of trade there, if trades start consolidating for too long, there's no point waiting for break and retest. Just go some points above and set buy stop, some points below and set sell stop. Because if that thing breaks out, it's not going to wait for anybody. Anytime price consolidates this much, it doesn't wait. So it was here at this level, and then yeah, we are expecting price to go up for pound card. For those that trade pound card, so once it breaks this zone, this is not so much of a consolidation. So once you break it, after you can see something that looks like double bottom. All right, you can see double bottom here. This is it. The price is trying to chicken out. So yeah, once it breaks like this, it's going to come back. And for those in my academy, if you look very well, you're going to see that if it breaks this zone, we'll have our first breakout structure. So if you don't want to enter the second leg, you can wait for the third leg. But seeing that that's one of the reasons, as I was telling you guys, that sometimes you would want to trade first breakout structure, but there are certain things that you have to consider. Now, seeing that this thing is double bottom on a major zone, the first breakout structure breaks, you find a point of interest as price is coming back to testing. As it's retesting and is confluencing your point of interest, then you look for buying opportunity. And if you buy this trade, you're going to be targeting around here. This is a swing opportunity. So you are going to be targeting up to this point, from here to here. So it's a very good setup, like really very good opportunity to trade. So be watching out for it. Pound JPY. One of the first pairs I traded when I joined the prop firms. This guy is really good. He can move very fast and give you a lot of pips before you know it. Fortunately, USD is the other of them all. All right, so we currently got to a major zone. Anybody that does not know how to draw major zone, cannot say anything. We should go and watch the mastery course. But Willis, I think he even teaches himself how to draw major zone on his YouTube channel itself as a free course self. So yeah, the price has gotten to a major zone, giving us this kind of setup. For people that are position traders are already selling this thing self. At the close of this candle, somebody must have entered a sell stop loss here, and they are targeting right here. This is simply like more like the way our Oga already trades, because transporting things from this time frame, you will not have a lot of stress actually. The only thing is you need a lot of money to be trading this way, because those guys, they don't fake out. Just imagine this wonderful setup. You are seeing a doji, you are seeing a close confirming it. This price is definitely going to go down. You don't even need a, a like you don't need a soothsayer to tell you that this price will go down. You don't need a soothsayer, at least to this point. Even if it doesn't get to this point, at least it's going to get to this point. So now when you're going to lower time frame, you are looking for opportunities to short this trade from here to this point. So we come to daily time frame. You see our first break of structure has already occurred. All right. So yeah, you can wait for your second break of structure. All right. But for me, I won't wait for second break of structure. Why? Because of what I've already seen there. So I'll just be looking for price to get to this point. This will be my POI. Price get to this point, I use confirmation entry and take this trade and sell it all the way to this point. Yeah, that's it. So we are waiting for a sell on GBP/JPY. GBP card is a buy breakout. Euro USD price is not set yet. AED USD and GBP USD, these two, you may want to watch them very well. USD card, definitely a sell. GBP/JPY, a sell. GBP AUD. Okay, this guy is consolidating and it's if you know, you know. We are waiting to see a breakout to the upside. After all, this is a major zone, and with this consolidation, we just need a breakout to the upside. All right, and you can actually use a buy stop. Just go to lower time frame and find a place to set the buy stop. But if you want to be very conservative, just let me just tell you how you enter this trade. Go to 4-hourly time frame. Once you have a 4-hour candle closing above, then wait for another 4-hour candle to retest it. After the retest and the bounce, you take the trade. Just use 4-hour candles to take the trade, because once you have that bounce, you can easily put your stop loss below the candle that bounced us. But one thing about breakout is that if it consolidates too much, it's not going to give you any retest. It's just going to break out and go. So sometimes you just want to use a risky entry and set a buy stop some price above, and once it's breaking out, you are triggering. The disadvantage is sometimes if it doesn't create some lower area here that you're going to put stop loss, to be difficult. So you don't want to come and start putting stop loss here and you're targeting here. It really doesn't make sense. So, but if price comes here and create a little bit of low here, that struggle before a breakout, then you have a very good area to put your stop loss. That's the disadvantage of trading initial breakouts. But that retest, that breakout that normally retest, you always have a very good stop loss area. That's the thing. So yeah, just yes, a lot of persons have different strategies they use to trade breakouts. Some persons use indicator. So whatever, actually, if this guy breakout is going to go up to this point. So whatever strategy you are using to trade breakout, just apply it. GBP AUD, GBP NZD, and GBP AUD, they are usually brother and sister. They do the same thing most of the time. Like I said, I've traded these pairs before. So and see, they do the same thing most of the time, like I said. So if that guy, this guy, I think this is a major zone, and yeah, it's a major. Okay, it's not a major zone. It's minor, but yeah, I just call this minor though. Still more like a major zone because we have this area, we have this area. Even though this guy broke through, we have this struggles, we have this. Okay, this actually there, this is there, and this touched it. Yeah. Anyway, I do not want to. The price here is not really that beautiful, so I don't want to like start drawing the major zone here. All I know is that this is a very strong support. So price bouncing off from a very strong support. Like I'm having. Let me. Like I'll have to change my network. So, okay. So seeing, like I said, GBP and GBP they are brother and sister. Same way AED and the ADUSD, same thing they do. So this guy is consolidating just like that guy is consolidating. So if this guy breaks out, this should be the target. The same thing that the two of them are doing. So AD JPY. Is one pair I was trading one time in school. I wake up early in the morning because of the time. I trade either Sydney session or Asian session because of is AED JPY. So I wake up and trade it because during the day I will not have time to trade. So that was basically the only pair I was trading. I was doing lower time frame, 15 minutes. So I was always seeing opportunity though. But it was stressful for me because it was nice. It's not like I had a lot of time to sleep during the day. So yeah, this guy just broke a major zone. So we confirm it. We're confirming it with a monthly time. We can see that the break has happened. Then let's go to weekly to be very sure that we are experiencing the bounce. Network is becoming slow. Nigeria. Hello, can you guys hear me?
Yes.
Why is this thing doing like this now? Why is it taking so much time? So as you can see, previous week closed a bit bullish. It's not so nice. But, well, on the fact that we have seen a retest here and seeing this closing, if you see a reason to buy, you can buy. Because, yeah. But before you buy, you need to see how many breakout structures. You need to see 2 breakout structures. And looking at here, we have not even seen one. So before the breakout structure itself will complete, would have confirmed it if this is a fake out or it's a complete breakout. So that's it. So this trade is not even a trade for next week. Or this week rather. pound chef. How come? It's like I've deleted, did I delete USD card from the after analyzing it? Okay, pound card, pound chef, not pound card. Okay. Pound card just tested the resistance and coming back, and then it's ranging. Pound card is ranging. Daily time frame is not covered. Yeah. So normally you're expecting it to break down. Why? There's a 75% possible chance that it's going to break down instead of breaking up. Price is on a very strength, and if it's ranging, we expect it more to break below than breaking above. It's a common principle. So for breakout traders, yeah, you look for your entry criteria when it breaks out and you try to sell. But this could still be an accumulation. So accumulation is when after consolidating for a while, start going up, start buying. Distribution is after consolidating for a while, start selling. So it's still possible to go up. Anyhow, like they say, if the market is consolidating, you really don't know for sure if it's going to go up or it's going to go up. But based on, the gurus, they always say that if market is going, and it sure does happen, you see it most of the time on the charts. If market is going down and then starts consolidating, then higher possibility that it's going to distribute eventually. It's going up. There's a higher tendency that it's going towards, price going to move up. So that's just it. So we are expecting majorly for price to go down. Yeah, the organ of them all, DXY. DXY has broken, and we don't know whether this is a retest or is a fake out. So let's see weekly time frame. You can see, look at what this guy is forming on a weekly time frame. Can you see that this candle is more, it's like it's bigger than this? There's a name they call this. This is not engulfer. I think engulfer is only for the bullish scenario. So, but there's a name for this. I don't know if it's harami or what. I don't know. It's been long. I read that Bible, this candlestick Bible. Those people that still read Bibles, candlestick Bible. There's a name they call this setup. Who knows the name? Hello.
Is that dark cloud?
Sir, you say?
Is that dark cloud?
I really don't know any names are too plenty. The only thing is that I actually know some of the candles. When I see them, I know this one represents something that it's for name. It's just the ones that I use most often are usually the engulfers, the doji, the tweezers. So, but this one, it should be harami. I think, no, this is not harami. Harami is when this one is bigger and this one is a bit smaller, and it's more like an opposite, like an opposing engulfer or something like that. This green one will be bigger, while the red one will be smaller. That's Harami pattern. More like a pregnant woman or something. But this one has a name because this looked like an engulfer too. Just that it did not engulf it at above but below. But this also signifies bearish reversal. And happening on the weekly time frame, it makes sense. It makes sense. So I believe maybe if you are looking at what's going on here, even if it's a reversal that we are expecting on dollar, that reversal is going to be massive, like for real. It's going to be very massive. But there's every high tendency that it's going to be a total, sorry, if it's a retracement, it's going to be massive, but there's another tendency that is a total reversal that will possibly experience. So for me, if I meet any POI, trading any dollar pair for now, I won't be targeting too much. I'll just be targeting like 50, 40 pips manga range. Just trade and get out. That's also what I'll be doing. That's for me until price eventually shows us which direction it wants to go. For now, you don't want to be holding trade for too long if you are trading a dollar pair. So if you are trading those other ones, we have a lot of crosses here. AED, JPY, GBP, GPAED. So you're trading the crosses, that issue. Then USDs. Yeah. And finally, for those of us that are cryptocurrency people, PTC, I've had my eyes on it too. And I entered last week or something like that. I got taken out anyway. But price is just ranging. That's the funny thing. So I would want to enter again when it breaks out from the range. I'm entering at Binance though, not normal. I should learn how to use Binance to trade chart. So with this one, now I'm waiting for the range. Once it breaks out of the range, I'm going to 50x leverage this trade. That's how I want to trade it on Binance. So, yeah. And here is my target. So once I get a 4-hourly break, I'm going to make a risk entry. I'm not even waiting for retest. So that's how it's going to be. I think I should place an alert here. Once price gets to this point, you should know. So I should start making entry to sell these markets. This is cryptocurrency. Sometimes it doesn't behave like Forex. So if it comes down, it might not even retest. It might just keep dropping. And even if there's a pullback, the pullback might not get to this point. So I'll be trading it from here. I don't think even you guys do cryptocurrency, but for those that do cryptocurrency, well, I've already analyzed this thing. So yeah, I entered around here last 2 weeks or so. I think around here. From using the lower time frame, I entered somewhere here. So price moved, got to this point, came back and took me out. So yeah, I lost the money. So I'm going to enter again when it breaks this point. Okay, we have come to the end of this session. Today I kind of do this, and why we are fast is because I've actually drawn the major zones and I've looked into the price before. So that's it. This is just meant for us to, grab some ideas and know what we are looking out for the week and not try to rush into trade. Somebody suggested AUD card. That AUD card is going to take us time because I've not really drawn the major zone. But let's see if I can analyze it without drawing the major zone. AUD card. Who is like me? I use Oanda. I used to use FX. I now prefer to use Oanda. Let's go to monthly time frame. So price is in between. It's a major zone here. 1, 2, 3, 4, 5. I can actually call this zone major. There's another area here too, 6. So price just left an area on the monthly time frame and is dropping. And the next area should be here. So we are on a sell. Yeah. So we should be looking for sales. First break of structure, second break of structure, retracements. If you want to wait, yeah, look for entry to short the market. The 8-hourly time frame, settings clearer. Wow, price is nice here. Risk entry would be nice for this trade. Just set your sell limits, refine this order block, and set your sell limits. Whatever it gets to this zone, enjoy yourself. This is a very nice setup for a sell. All right, so I think, yeah, you should be looking for a sell around here, 0.921 something. But however, I might not get to that zone. So if we draw our flip from here to here, price may respect this zone. This is the Willie zone, all right? Price may still get to this zone, but I would prefer to start shorting from here. But price may just get to this zone and go down. This tradable order block confluence with the breaker block. All right. If you want to draw your fee from the total swing, discover that that's actually the zone you should be looking out for. Look at it. You want to confirm. So you can see that this is the zone that goes with the Willie's zone when you draw the full swing. So yeah. And this is a very nice area that I would want to see price to get to before trading it. And that is a very good reward. Like, it's going to be a very massive, nice trade. And this will happen this week. If it actually goes up sharp, because price may get to this point and start dropping. That's the funny thing about trading. So this area, according to my students that I've taught, you can always look out for price here and buy. But from the schematic I'm seeing on the chart, I like to see price get to this point. That would be the best place to sell. Yeah, if I should get a trend line, I think I'm seeing one potential trend line. Okay, it might be when it gets to this zone that it will hit this trend line. So on getting here, it will break it out. So this might hold when it gets to this zone. It might hit this trend line for the third time. It might hold, I don't know, but yeah, anything that price does, if it gets to this point, use confirmation entry. You know, like the first USD card I analyzed how you would have entered it to find your POI again in the 5 minutes time frame or 15 minutes. I prefer 5 minutes. So 5 minutes, you see everything. So it's 5 minutes for your POI and try to short from here if you respect this zone. Otherwise, this is the best area to sell. Yeah, that's all for tonight. Anything to add to the class? Is there anything?
Nothing from me.
Yeah, those people that left say that. Yeah.
The only thing I'm gonna be waiting for is to learn about the confirmatory entry. So confirmation entry. So I know about the risk entry now. So
Yeah.
yeah.
So that's it. Anyways, yeah, we are done. And there's something I wanted to say. There's some of those guys in the mini mastery course. You want to join my academy. For those that are in Nigeria, I wanted to do something because I know that probably what I charge is much for those people in Nigeria. I don't know. So, but I'm still looking at one or two stuff. I will talk to you guys later. I will post on the mini mastery. Okay, I've told us that I want to be posting every update now on the Discord channel. So I think you guys should just try to start using Discord because it'll be fair enough, because if I have any session, I can easily upload it on Discord. WhatsApp has limits. So are you guys?
Anyway, don't forget to post your YouTube link.
Okay, I'll post my YouTube link and upload this. I might upload this tonight. If I don't, then I'll upload it very early in the morning.
Okay. All right, catch you later, guys. Thank you.
Yeah, I'm signing out from here.
Bye-bye.
Yeah. Good night, all.
Good night.
Happy trading week.
Thank you. And you too.
Yeah.
You, sir. Thank you.
You're welcome.